Hi, do you know the impact of your behavioral biases on your portfolio? It's okay, almost nobody does, which is why I developed this investment optimization report. My name is Dr. Amos Nadler. I'm going to walk you through it right now. This report, what it does is it helps us understand the impact of our specific behavioral biases in a way that we can change. So let's dive into this report. So what I do here is provide you with your portfolio relative to some benchmark, which if you're an American equities investor, that's probably the S&P. What I'm also going to do in this report is show you the categories of investment biases and show you the impact they have on your portfolio. So this table provides you with that comparison, and the graph below also lets you visually see your performance relative to the benchmark and relative to these counterfactual portfolios so that you can see how much money you might be leaving on the table. So let's just go through the first category, which is category 1. So this is what's called the disposition effect, and this is how we manage our winners and losers. Most people have a hard time selling winners at the right time and have a hard time selling losers at all. So what this report does is it shows us the exact quantity of money that people leave on the table through the mismanagement of winners and losers. And the report provides you not just with a graph, but also some tips and interpretation for your specific investment style. Category 2 is what I call the invisible portfolio. The invisible portfolio contains the assets that investor has already sold and is not tracking on their portfolio. Why it's important? Because often people sell winning positions far too soon, and then those go on even further to make some more gains. So alpha is left on the table. So category 2 helps us understand how risk-averse selling might be driving performance, or rather underperformance. And of course, there's tips for each one of these. The third bias that we look at is what we call, it could be dip buying, it could be loss chasing, averaging down, whatever you want to call it. And what this shows us is what is the impact of buying more of a stock when we're in a losing position. The leading economic theory around this is that people like to buy more when they're in a losing position to reduce the disutility of losses, because when the price is below your average cost basis or your ACB, it feels bad. Some people do this quite well and buy the dip and prices go up, but some people also do this and tank their portfolios. So each individual investor is different. It's important to understand what your specific biases are and how they affect your portfolio. So if we look at this specific investor, we can actually learn that they beat the benchmark, they beat the S&P, but their disposition effect portfolio beat them, and they've left significant gains on the table. In the report, if you'd like, can also include a performance tear sheet, which has an exhaustive list of what are called hedge fund metrics. So this would be your drawdown periods, your quintiles, underwater plots, and all sorts of other really interesting metrics that better help you understand the performance of your portfolio. So I hope this gives you a better idea of what the investor optimization report is. Getting started is very easy. Just reach out. All you have to do is provide trading data, and off we go. So reach out, and thanks for watching. See you soon.